In this video, we are going to watch about lock-in period in IPO. What is lock-in period in an IPO? In an IPO, the lock-in period is the length of time that an investor must hold on to their shares before they are allowed to sell them. This period for an IPO typically lasts for 6 months, but can be up to a year. The length of the lock-in period differs. In the case of institutional investors such as banks and hedge funds, the period is usually 1 year. The period typically is 6 months for individual investors who buy shares through an IPO. For an anchor investor, the period is usually longer than the other investors. Thus, the lock-in period varies among the different IPO investors. What is the purpose of the lock-in period in an IPO? It is minimum time an investor must hold shares before selling them. The purpose of this period is to ensure that investors do not sell their shares immediately after an IPO, which would likely result in a loss for the company. It also allows the company to raise more capital by selling additional shares to investors who are willing to hold them for a longer period of time. What is the importance of the lock-in period in an IPO? An IPO lock-in period is the time during which shareholders are prohibited from selling their shares. The purpose of it is to give shareholders a long-term investment horizon and to prevent them from selling their shares immediately after the stock price goes up. This allows the company to have more stability in its share price and to raise more capital. What is the real idea behind the lock-in period? The lock-in period is meant to give the stock time to stabilize after the IPO. After a company goes public, a limited number of shares are available for trading. The investment bank will also provide guidance on how many shares to sell and what price to set. Companies often ask whether or not they should have a lock-in period for their IPO. Are there any risks associated with a lock-in period? When investing in an IPO, there is always a risk that the stock price will fall below the offering price on the open market. There is also a risk that the company will not perform as well as expected and that the stock price will never recover. If the stock price falls below the offering price, investors may be stuck with their shares for a significant time. In conclusion, you should have a better understanding of what the lock-in period is in an IPO. It is the time frame in which insiders are restricted from selling their shares. After the period expires, the stock price often falls. This is because there is now more supply of the stock on the market and demand has not increased. This lack of demand can further push down the price. Now, let us look at a few stocks whose lock-in period has ended, or is about to end in November. Fino Payments Bank lock-in ends on November 10th with the current market price is at 194.75 rupees while its issue price was at 544 rupees. A significant drop in share price has been seen right since the inception of the IPO. PB Fintech Policy Bazaar lock-in period 2 ends on November 10th with the current market price at 378 rupees while its issue price was 1,150 rupees. This stock too has not performed well and has been on a downtrend since listing date. Paytm lock-in ends on November 14th and the stock is currently trading at 626.9 rupees while its issue price was 1,950 rupees. This stock too is down by about 70% since its listing date, mostly owing to its expensive valuation during the IPO. Though its stock price has stabilized at its current level, no signs of an uptrend can be seen as of now. Sapphire Foods lock-in ends on November 15th with its current market price at 1,346 rupees with its IPO being priced at 1,350 rupees. This stock has been a good prospect for investors as despite the volatility seen in its price, it has provided good returns for investors. Delivery lock-in ends on November 19th and the stock is trading at 375 rupees. Its issue price was 495 rupees and initially it provided good returns for investors by notching a high price of 708 rupees. However, the stock has corrected recently after a brief period of consolidation owing to its poor quarterly results. Tarson's products lock-in ends on November 23 with the current market price at 691.95 rupees, while its issue price was 682 rupees. This is another stock which has given positive returns, albeit slightly, to their investors thus far despite volatility being evident in its stock price. Go Fashion lock-in ends on November 25 with its trading price being close to 1,234.7 rupees as compared to its issue price of 1,310 rupees. The stock has already notched a high of 1,453 rupees. A downtrend was seen within the first few months of listing, but given that the stock has charted an excellent recovery and now trading below its listing price, Nika lock-in ended on November 9 with the stock trading at 188.25 rupees as compared to its issue price of 2,018 rupees. The stock was split with a 5-to-1 ratio. Nika was up by 5.15% and closed at 185.5 rupees today. Ethos Limited lock-in ends on November 25. The stock currently trades at 1,000 rupees and its issue price was 878 rupees. This is another stock that has created value for their investors with the stock trading above its listing price since mid-July of this year, despite a poor listing. Currently it has formed a triangle pattern and has broken the downtrend, and an up move can be expected to reach 1,100 levels. Please like, share, and subscribe our video. Thank you.